Good morning, everyone. Welcome to the Stock Market Morning Prep video for Tuesday, April 14th. Well, we did get another reversal, intraday reversal in the markets yesterday. Markets every day for the last, I would say, just about 2 weeks have pushed up at the opening, rallied for about a half hour or so, and then kind of taper off going into late morning, early lunch, and then sell off into the close. Pretty much that's what we've been getting. So it's a very dangerous market if you're not quick and sharp on your toes here. Overnight, we had some European data come out, and they really kind of hit the futures hard, and now they started to recover. And reason why is because we had Wells Fargo come out with some good earnings. They beat earnings as well as Chase. So that may be a good catalyst for the day. We definitely need a catalyst to push this market out of our ranges here. So we've really gone nowhere since, I'd say, the last 6 to 8 weeks. And then we had that little push going into the beginning of the year. And prior to that, we've gone nowhere again. I'll show that to you in the daily charts. I've showed that to you before. But I want to take a look at the XLF, which is the banks and financials. They have not participated in any type of little rally. If anything, you could see they have gone nowhere. November, December, we got that little bit of a push-up, and then we actually sold off going into 2015, and we've gone nowhere, as you can see, just about 2.5 months of sideways price action. So, that being said, I think that if the banks and financials start to report good earnings, right, I think that could be a good push, a good catalyst for the markets to actually rally. Now, because they have not participated. I also see technology starting to kind of firm up a little bit. The only canary in the coal mine is, again, the transportation sector. So let's go dive into the charts, and I'm going to show it to you. You can see the daily chart, the XLF. Take a look at the weekly. I've showed this to you many times. 25 is the key, guys. We need to break out of 25. If we can break out and close on a weekly basis above that, and maybe consolidate a couple of weeks thereafter, then I think we have some renowned money coming in, new money coming, and then starting to move higher again. So keep an eye on this, on the banks and financials. They're going to report. A lot of the majors are starting to report today and tomorrow. So that may be the catalyst to push this market higher yet again. Take a look at the spiders. As you can see here, guys, just a lot of chop. We are above that main area of resistance, which is now support. But if you look at it and just kind of dive into this little area here, we are literally in a sideways channel, a small sideways channel, and we have gone nowhere. Again, for about 2.5 months, we've gone nowhere. And this is just nasty price action here. So again, we need to either break back above the upside and get new order flow, meaning new money coming into the markets, or let the market start to sell off again. And you know what? It would be beautiful if the markets could sell off, because you could just look at this. If you could see this price action since early November, it's just been horrendous. And that's what we're looking for. We want price to start either breaking out to the upside so we can get new money flowing into the markets. We're looking for a catalyst, right? So far, there hasn't been anything significant to push this market either higher and or lower. Okay, take a look at the IWMs, which to me has a beautiful ascending triangle, which is a bullish formation. If we could take this out and possibly, remember, the banks and financials are 25% in the IW and the Russell 2000. Now, they are the smaller tier banks, but remember, any type of good news in banks they're all gonna run on sympathy to the upside, and or to the downside for that matter. So let's keep that in sync too. Watch the banks and financials, the XLF. You'll get some clues for the IWM, which will be the Russell ETF, the Russell 2000 ETF. So nice formation, higher highs and higher lows, and we're challenging the highs here again. So this is definitely one of the strongest of the 5 indices that we follow. Now, the transports is right now our leader and is the weakest. Now, this is not a good sign, guys. We barely could get above the 20. Yes, we rallied for 4 or 5 days, but what a weak rally it was. You can see volume was decreasing every single day. Now that we have a reversal candle here, we need to take out the 155.89. If we start to lose that 155.89 for yesterday's low today, then I would look for some further weakness, and I would look to say that the markets may be in trouble here, okay? Although the banks are doing okay, they reported a couple of them. Just don't take that as a sign that maybe we might rally yet again. Remember, guys, we're at all-time highs, and it just seems to be not enough money to come into this market to push this market to new all-time highs. Yes, we're close, but Even if we push to all-time highs, again, just a guess, to me, it would look like the markets would rally, create some sort of a capitulatory top, and then fail. Okay, and that's what I'm thinking here, because look at the transports. For months now, we're going nowhere. And why? This is a big gauge of the economy, guys. When you see the transports are not making money and they're not doing well, that means production, that means products, resources are not being shipped. So that's a big no-no, and this is not a good sign here. So we really need to keep tabs of what's happening here. Okay, couple things too as well before we finish up is, the dollar. The dollar played a significant role last quarter on corporate profits for these multinationals. So we're going to really listen to the earnings reports closely to a lot of these multinational companies that do a lot of business abroad, and see if corporate profits were weakened by a strong dollar. Now, the good thing about it is seasonality. April, May, June, the dollar ends up being weak for a few months. If that's the case, you might look into next quarter as being something positive, okay? But again, that doesn't mean that it has to happen. It's just something that to be aware of, okay? Diamonds, Dow Jones ETF, you could see, again, same thing. We really have gone nowhere in this market, unless you're a good scalper, which I am not a scalper, but if you're a scalper, this is for you. This market is for you. This is just terrible here, okay? Let's keep that in mind, guys, while we're trading. Also, the Qs. Qs, same thing. You could see, just in a really bad, choppy pattern. Yeah, we recovered quite a bit. But remember, the intraday charts does not look like what the daily charts are showing us. You have movement to the upside, we base, and then we sell off again. So that is not a good sign that we're not holding our gains intraday. Okay, so just be aware of that. Don't get too crazy to the long side. I would not be too crazy to the downside as well until price tells us really which direction we're going to go in, okay? And we're going to leave it up to the market to decide where the ultimate trend's going to be. The intermediate trend, let's say it that way. Short term, we have no trend. We're just basing here. We're just basing to a sideways consolidation channel, and we are at the upper end of the range, which is positive, but at one point in time, something's got to give here. We're either going to break to the upside, start making new highs again, or we're going to start selling off again. And with some of these numbers that are not coming in so great, a lot of European numbers are really not so stellar. We had China numbers yesterday, were really horrible. So at one point in time, something's going to give here, guys. So we need to really be careful, and definitely be careful holding positions. I'd be very careful with the overnights, because anything could come out. Someone could say something while you're sleeping, and next thing you know, market's down big and you're long a whole boatload of stocks. So just be careful, okay? Definitely use your stops. Make sure my analysis is correct with your analysis, that you agree. And we'll speak to you tomorrow. Take care, everybody. Have a great day trading.